Everyone, we're group 9 and we're going to talk about DoorDash. This is Andy, Manuel, Sam, Brendan, Mali, and George. So DoorDash idea as a restaurant delivery platform came up as the founders were talking with a restaurant owner in Silicon Valley where he was explaining how painful it was for them to deliver food. After several more of these interviews, they decided to work hard to provide the best delivery experience, in charge of not only hiring drivers and delighting customers, but also in building a complex dispatch system. Even in the early days, they wanted to enable every merchant to deliver. Now, during the past year, they have seen tailwinds from regulation in the gig economy, headwinds from food delivery surges during the pandemic, and different social changes. But in aggregate, they're still struggling to find profitability. We've heard the CEO say that the vision still hasn't changed, and they see themselves as a logistic company more so than a food company. With this in mind, our team will answer the question: how does DoorDash can use its competitive advantage to move into new markets and reach profitability? Now, because of the company's activity system, its different sets of values, and its network effects, expanding it beyond food delivery presents a spectrum of new opportunities. They have a healthy share of the restaurant services market, but even in this market, there are other opportunities, like for example, snack and non-alcoholic beverage deliveries, where there are other players are dominating, such as GoPuff. There are other SMBs that still require the ability to deliver, like pharmacies, for example. But as we can see here, the grocery delivery market is as big as the restaurant one. And even though there are big players here like Instacart or Amazon, we believe there is potential for another player to be in this market.
So we believe that DoorDash should look to enter its next adjacent market based on 4 key characteristics that we've listed here: delivery time sensitivity, logistics and its complexity, market size, which is hugely important, and then synergies with the current business. So as I think everyone can appreciate, restaurant delivery is the largest, most time sensitive and complex current category. And we think that DoorDash should move intentionally from high complexity markets towards stores with lower barriers to entry. Additionally, grocery delivery presents the smallest degree of separation from their current core competency. And by moving into the next adjacent market, we believe that this offers both an offensive and defensive perspective. So defensively, they are protecting their current moat, which they enjoy in restaurant delivery as the largest market shareholder. And then offensively, they're able to attack the incumbents in the grocery delivery space, like Instacart, which we'll discuss later. So we laid out what we believe is the most logical sequence for going from their current market into future markets, and as well as below. And this is in line with what the current management team at DoorDash is pursuing. In the second half of 2020, they had announced plans to enter the grocery delivery market. And we believe that this is the most logical sequence for them to do that.
Next, we look at DoorDash's progress over the last few years. In 2020, they emerged as the clear market leader in US food delivery, posting revenue of $2.9 billion and positive EBITDA. Since 2018, their market share has grown from 17% to 50%. Along the way, they've rolled out additional services such as Drive, a white label delivery service, DashMart, a virtual convenience store, and Storefront, an online ordering platform leased to merchant partners. Product development endeavors heavily emphasize small-scale pilot programs and iterative designs, which empower product teams to experiment, revise, and take winning ideas to larger scales. In all things DoorDash does, they think of strengthening the reinforcing network effects that have made them successful. As the diagram in the bottom right shows, DoorDash products are aimed at providing more value to their consumers, merchant partners, and Dasher delivery teams. This focus puts an emphasis on finding ways to deepen relationships with those partners, developing services to increase customer lifetime values. Moving to the next slide, as we think about where DoorDash currently sits in terms of products and capabilities, we also consider external factors that will impact their success in the grocery market. The grocery segment expands the set of merchants and consumer partners for DoorDash, as well as their competitors. Winning formulas for grocery stores, both large and small, will vary significantly from what has worked with restaurant partners. Consumer value drivers are also different for takeout orders versus grocery orders in terms of delivery speed and availability expectations. Moving clockwise, evolving legislation around the gig working economy poses a serious risk to DoorDash's business, as does the environmental impacts of delivery and packaging. Thinking about the broader market, anticipating demand post-COVID is a major uncertainty, as is the scope and depth of service that DoorDash's grocery partners will desire compared to restaurant partners. Finally, we consider the usage of both merchant and consumer data, as well as the continued development of autonomous delivery platforms as two key opportunities for both DoorDash and their competitors in the delivery space.
Just to set the stage from a market and financial KPI perspective, DoorDash has demonstrated the ability to both capture share from its key competitors in the online food delivery space while generating positive free cash flow and growing into its revenue and cost structure. To note, DoorDash controls almost 50% of the market today, which is up from about 20% in 2018, with contribution costs per unit falling more than 35% from 2019 to 2020 to about $2.75 per unit. Further, the business has expanded gross margins more than 1,000 basis points year over year in 2020, despite falling average order value, demonstrating a high degree of stickiness with both its merchants and its end customers. DoorDash has proven out its thesis in providing substantial financial and operational value across its ecosystem to its end customers, its merchants, and its logistics partners, in other words, the Dashers. Though key providers like Instacart and FreshDirect in the grocery delivery space have been unable to generate positive free cash flow or EBITDA margins to date, we believe DoorDash's existing infrastructure positions the business incredibly well to upend this space, particularly given the overlapping logistical complexities between online food delivery and grocery delivery. Considering its SMB and local restaurant roots, we believe DoorDash should consider pursuing the substantial white space opportunity in the SMB grocery market rather than engaging with grocery chain partnerships in a crowded market alongside Instacart, FreshDirect, and other peers in a price-driven war for growth. The company has already dipped its toe in the water with its Drive initiative to white label grocery and convenience stores like Walmart and 7-Eleven, helping them to test certain concepts while not overextending themselves.
Thanks, Brendan. So we've seen that entry into the grocery delivery business makes sense strategically and financially. However, to do this, they're going to have to do things differently from incumbents. And this is going to rest on 5 key areas. What they're going to do is separate out the picking and packaging of the order from the delivery of the order. So they'll have a network of in-store dashers equipped with technology, efficiently packaging up grocery orders for delivery, and then other dashers coming to the store, getting the items and delivering them to customers. To do this, they'll need technology development to expand the current logistics platform to include these new services and SKUs. They'll need to build merchant relations with the grocery store chains. They'll need to focus on customer acquisition from both existing and new customers. They'll need dasher relations to be healthy in building this new workforce, as well as making sure government regulators are satisfied. And they'll need to ensure internal cultural norms are set and communication is effected up and down the chain. Now, within each of these areas, there are discrete tasks that need to happen over the next 2.5 years. Some are in motion, and some can be started in the future. So upfront, they need to ensure they hire well internally. They need to develop technology to ensure that grocery orders are delivered properly. And they need to build that in-store network of dashers. They also need to develop new technology to expand the logistics platform for grocery items. And they need to create these merchant-specific services to allow the in-store dashers to pick up orders efficiently, to help the grocery stores plan demand and forecast. And they need to build these merchant relations, especially in tier 3, tier 4 markets, and work with merchants to create stations for dashers to work in to increase efficiency internally and externally. Now, the entry into this new market poses risks. There's established competitors. They have to build these relationships with supermarkets, and grocery inventory, as mentioned, is quite complex. We think each of these is actually an opportunity. First, DoorDash has experience competing with large customers, and its restaurant business is profitable, meaning grocery entry can be subsidized. Second, DoorDash already partners with chains of restaurants, both large and small. And we think this is an advantage when they focus on their tier 3 and tier 4 markets to really get the long tail of grocery stores. Lastly, the complexity of grocery inventory is the key to their entry. When they create the in-store network of dashers, they'll create technology that helps them be more efficient, as well as helps the grocery store plan and stock items better, and then leverage the existing delivery network to get the food to consumers. Next, I'll pass it on to Marilia.
DoorDash has already set up new teams within their operations department to handle the new verticals. However, internal culture, which they repeatedly mention is a core strength of the company, represents a challenge for future growth. Their 12 values are based around the 4 pillars seen here, and the company has some of the benefits of working in a startup, such as providing a flexible and challenging environment. However, when we saw reviews of current and former employees, we identified some worrying trends. Work-life balance is terrible, and employees are asked to put work above everything. Management is hiring their inexperienced friends for key roles and showing favoritism in evaluations. HR shares confidential information around the company. And finally, the career growth expectations promised at hiring are unattainable. While these issues can create a toxic corporate environment, we believe they can be easily turned around to continue supporting DoorDash's growth. Next slide, please. DoorDash's growth has been enabled partly thanks to the benefits they provide for their dashers, such as being the first to offer occupational health insurance, and merchants, such as offering low commissions and wide reach. To transition to new verticals, the work they will need to do with dashers will be focused on recruiting and retraining, as well as refining incentives to promote the adoption of new verticals and improving flexibility to handle the increased number of options in the gig economy. In terms of merchants, recruiting will be a key challenge, especially considering that grocery has more powerful players than restaurants. The other key challenge they will face is in terms of app developing. The thousands of retail SKUs might risk the app's capacity, while the UX will need to be adapted to serve the larger and more complex corporate merchants. Next slide. So what does DoorDash need to do for a successful transition to other verticals? In December 2020, DoorDash raised $3.4 billion in their IPO, so we don't think money will be an issue for their growth. In 2019, they acquired Caviar, a higher-end food delivery app, and Scotty Labs, an autonomous driving startup. In 2021, they acquired Chobotics, a food prepping robot company. They have also partnered with software, logistics, and pay companies. All of these partnerships and acquisitions are helping DoorDash disrupt the food delivery market while improving the consumer and merchant experience. In the future, we expect to see similar partnerships and acquisitions with innovative tech and logistics companies that will help them disrupt the last mile delivery segment. Now I'll hand it off to Sam.
So while we believe we've laid out the most viable long-term plan for DoorDash's success, we recognize that there are some alternative scenarios that could play out as well. These 3 pillars that we've listed here, between competitive corporate variables, the potential to buy rather than build, and regulatory concerns, are the 3 main things that we believe could impact alternative scenarios. So for instance, in a competitive landscape, if Uber Eats does somehow capture larger market share in the restaurant delivery space, they could become a more long-term viable threat to eat into DoorDash's ability to expand successfully into adjacent markets. For instance, if Uber Eats were to purchase GoPuff, which we see as a large competitive threat in the future, that could cause some concern from DoorDash's long-term success. And as far as buying rather than building, we don't believe there are any tenable acquisitions that DoorDash can make at this point in time. The large competitors in the grocery delivery space would be too financially burdensome in order for DoorDash to integrate them, and they would also have some cultural concerns as well. And then regulatory variables, which so far have not been a problem, but Prop 22, which was passed over gig economy workers in California, if there are other concerns that come out elsewhere in the country, that could impact the unit economics of their business and their ability to be profitable in the long term, both in the restaurant delivery space and in grocery and other delivery mechanisms as well. So with that, thank you very much. We'd love to open it up now for questions.